As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I hand the conference over to Mr. Sanket Chedda from DAM Capital. Thank you, and over to you, sir.
Yeah, thanks. Hello and good evening to all of you. We have with us the entire management team of Muthoot Finance to discuss their Q1FY24 results. Naming the management, we have with us George Alexander Muthoot, who is a managing director, Mr. Alexander George, who is a whole-time director, George M. Alexander, whole-time director, George M. George, George M. Jacob, both of them are whole-time directors, Mr. Epin Alexander, executive director, K.R. Bijimon, who is also an executive director, and Mr. Roman Mamen, who is the CFO. Without further ado, I will hand the call over to Mr. George Alexander Muthoot for their opening remarks, followed by which we'll take Q&As. So over to you, sir.
Thank you and good evening to all. I am George Alexander Muthoot, Managing Director. Today, Muthoot Finance had its board meeting and the results of the Q1 have been finalized and they have been uploaded to the stock exchange also. I would now like to say a few things about the performance highlights of this quarter. Our consolidated loan assets under management has increased year-on-year 21% and today stands at 76,799 crores. We also had the highest ever quarterly gold loan disbursement of 53,600 crores. All-time high gold loan portfolio growth in any quarter one of 4,164 crores. There is an increase in the consolidated PAT of 27% year-on-year, which is at 1,045 crores, and the standalone profit after tax 22% year-on-year at 975 crores. There is also an all-time high interest collection in any quarter, first quarter of 2,863 crores. On a Q-on-Q basis, the gold loan assets have grown by 4,429 crores in this Q, which is up by 7% quarter-on-quarter. And the gold loan assets has also grown by 4,164 quarter-on-quarter, so again 7%. Other key highlights we would like to place here would be we opened 59 new branches in this quarter. We received permission from the RBI in July last month to open 140 new branches. We have raised 179 crores through the 31st public issue of secured NCD, mainly from retail investors. As far as the subsidiaries are concerned, the growth revival continues, and for Muthoot Home Finance, the gross AUM stands at 1,501 crores, with a growth of 4%. The disbursal this quarter is 109 crores versus 69 crores in the quarter of last year. The interest income is up by 10% to 37 crores versus 34 crores in the last quarter. The profit after tax of 4.72 crores versus 1.41 crores in the same quarter last year and 2.1 crores in the last quarter. GNPA and NNPA stands at 3.79 and 1.21 crores in this quarter, respectively, against a higher GNPA of 4.01 and 1.39 in the March of last year. The provision coverage ratio in the home finance is 70.37 crores, higher than the required provision as per NHB norms. Muthoot Money there is a continuous decline in the NPA through physical collections witnessed consistently throughout the quarter. The NPA decreased to 2.46 crores for 46% from 3.72%. The gross loan assets has increased from 387 crores to 496 crores, and the branch network increased to 185 from 149. The Belstar Microfinance has seen an improvement in the disbursement month on month to 700 crores per month. The gross loan assets under management crossed the 7,000 mark, and the collection efficiency on regular accounts is 99.4%. GNPA stands at 1.62% and NNPA at 0.21%. There has been improvement in the credit rating, and the outlook has changed from AA minus stable to AA positive by CRISIL rating agency. Belstar has also started expansion in other than Tamil Nadu states to reduce the concentration of Tamil Nadu, which is a home state. This has been initiated in line with the long-term strategy to diversify the concentration from 49 crores to 35% by financial year 2026. The other results, all details are there in the file with this. Muthoot Insurance Brokers it's a wholly owned subsidiary, has generated a total premium of 148 crores premium collection as against 131, and the profit after tax stood at 10 crores versus 4 crores in the same quarter last year. Asia Finance PLC, which is the Sri Lankan subsidiary where Muthoot holds 72.92%, the loan portfolio grew to Sri Lankan rupiah 2010 during the year as against 1,762 rupees Sri Lankan rupees last year, which shows an increase of 14%. Year on year, revenue has also grown up, and the profit after tax stood at Sri Lankan rupees 6 crores in this quarter as against 5 crores in the same quarter last year. I think with that, I would like to conclude my initial opening remarks, and I would now leave the floor open for clarification from the investors. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Nischint Chawathe from Kotak Securities. Please go ahead.
Hi. Thanks for taking my question. We're trying to get a little bit of sense on your cost of borrowings, which are inched up by around 40 basis points quarter on quarter. So if you can kind of just explain what exactly happened over here and what will be the outlook for cost of borrowings going forward.
Nischint, the cost of borrowing for the quarter stands at 8.41%. March quarter it was 8.02. So there is an increase of about 37 bits. As you know, most of the banks, MCLR is around 8.6 or 8.6 or 8.65. So gradually it will move in that direction. Unless there is a reduction, which is not likely to happen, I feel in the next 6 months to 1 year. So it is more moving in that direction.
Sure. And on the yield on loans, if I kind of try to see it mathematically, there is some compression on a sequential basis, not very significant, but some compression. So how should we see that? And, in light of the fact that interest cost is going up very significantly, let's say over last quarter and this quarter, would you kind of see overall, rates going up?
So March quarter, the yield was at 18.48%. This quarter it is 18.08. If you look at the last year, it is 17.3. So, compared to last year, certainly it is a higher number. Of course, gold loan business, that could, because it's a short term, there could always be a fluctuation of 30, 40 or 50 basis points. Fluctuation either side. So, we feel this is a normal thing which can happen because it is a very short term.
No, fair point. But I think the point I'm saying is that, given the fact that if you look at last quarter, which is first quarter and second quarter, we're probably looking at around 60, 70 basis points kind of increase in cost of funds. Probably half of it has happened and maybe, some of it is kind of coming in the next quarter. So in light of that, would you sort of, believe that across the board there could be some hikes in gold loan rates, or is the competitive scenario such that it doesn't make sense?
You're right, because if the gold borrowing rates are also going up, certainly we will be increasing our lending rates also. As you said, rightly, we try to maintain our spread and NIM to the earlier level so that that doesn't get affected. If overall the cost of borrowing is going up, definitely the cost of borrowing for our gold loan borrowers or their other loans also should go up, and we wouldn't find it difficult to pass it on to the customers. That's what we usually be doing. Certainly, we'll be taking a call on that also as if the rates go on increasing. We'll pass it on to the customers.
And have you seen any of this in the ground right now, or we'll probably take a call in the next couple of months?
Because we review these interest rates maybe on a monthly basis, or once in 2 months we review, and wherever we feel there is some tweaking to be made, because there are so many schemes, etc., we tweak some of these schemes so that we get a better yield. If the cost is going up, certainly we will pass it on to the customer also. That is definitely the policy here.
Perfect. Thank you very much and all the best.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Raghav Garg from Ambit Capital. Please go ahead.
Yes, thanks for the opportunity. Just one question from my side. So, historically, we've seen that your yields and margins in Q1, they always tend to be lower quarter on quarter versus your Q4. Can you help us understand what is the element of seasonality here? And my second question is that though I understand that margins have compressed quarter on quarter because of higher borrowing cost, I think you partly answered that. Should we expect margins to expand in subsequent quarters and overall margins for full year be higher than last year? Yeah, those are my two questions. Thank you.
Okay. We have a NIM of between 11 plus and a spread of around 10%, maybe plus or minus 0.5%. So I think going forward also we will be maintaining that. And if, as I said earlier, if required, if the cost of borrowing is going up, we'll increase our cost of lending also. We will increase our lending rates also.
Sir, but could you help us understand why your margins are always lower in Q1 versus Q4 of last year?
I don't know. We have never thought like that. Why quarter one is so? Yes, a small loans.
No, your question was on the seasonality. I don't think now, since we are spread out across the country, there is any specific seasonality in terms of it is all about the schemes you drive. As I said to Nischint, because it's a short term, there could be always be different schemes run parallelly in different locations. So there could be always be a fluctuation of 30-40 basis points between quarters or any time. So that is a normal thing. But compared to last year, we have already taken a call that we should increase the interest rates. So that's why the rate has gone up during last year, because first quarter you can see that the yield was 17.3%, and that is more because of the impact of the teaser scheme. Subsequently, we revised the interest rates continuously in the subsequent 3 quarters, which helped us to reach 18 or 18.4% last year in the subsequent quarters.
Sure, thank you. And just another question, sorry. So you've delivered about 18% gold loan growth. Your guidance has always been about 15%. Is there a chance that you would like to revise your guidance given the positive momentum that we've seen in this quarter?
Yeah, you're right. But anyway, we will try to stick to what we said earlier. We will try our best to deliver more than what we have promised for this.
Sure, that's all from my side. Thank you.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah, hi sir. Congrats on the quarter. Just wanted to clarify one thing. Now with our loan to value ratio at 68%, it's fair to assume that this ratio does not go up much more, and whatever growth comes should come from tonnage growth, right?
What is that? Assuming that it is just that the 68%, 70% is the average, the loan which people take, average. Some people take 60%, some take 65%, and majority of them take 75%. It is the 68% is a function of that, the rate, the amount which people take on their loan. So it's not that we are going to maintain the LTV at 68%. It is just it just happens that people don't need more money, they don't take more money. If they need more money, they'll take. So there is no relation that we should, we cannot do. We are permitted and we would like to give it up to 75%. But if people don't want it, we don't give it.
Got it. Okay, so that was all from mine. Thank you.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone telephone. The next question is from Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, good evening and thank you, sir. Sir, one, if you can qualitatively comment, in the past quarter we had mentioned that the rural demand seems to be picking up for the kind of products and customer segment that we cater to. So one, qualitatively, if you can comment, and we are seeing this in numbers too, so if you can comment how is the demand shaping up, and also the competition that we saw 6, 12, 18 months back, just some update on that.
No, the business for us comes from all the areas, and we have been confident of maintaining our NIM, etc. So I think our non-gold loan segment also continues to grow, and we witness improved business performance. And so far we have seen that gold loan also is driven by strong domestic demand. And I feel that going forward, the demand will be there both in the rural as well as the semi-urban and urban areas also.
Correct. And sir, any comments on the competition? How is it shaping up currently?
So as you know, competition has been there, and probably from the banks, etc., has been there for the last 1 or 2 years. We have, nevertheless, we have also been able to grow our book. So competition is there. As I said earlier, when people feel this is a good sector to be in, so more and more people are coming, and the players, with focused players, will continue to do better. And I think our results in the last 2 quarters also prove that we have been able to maintain our position as a leader in this segment.
Correct. But if the competition is receding, I mean, at one point of time we used to make 12, 13, 14% spreads. Maybe it might be one-off, but we used to do 12% spreads for quite some time. And in your comment today that we will be in the 9.5, 10.5 range. So what has changed then in the industry?
No, the 12% etc. came at a very, we should say, one-off time when we did more, what should we say, auctions at that time, and the realizations were better, etc. It's the time when we got more yield at that time. But that was a one-off. So generally, we also tend to be happy with the spread of around 10%. I think we should be able to, attain that going forward also. 12 etc. came 1 or 2 years or so, but I don't think that can be something which we also feel that it can be sustained and continued.
Correct. And the last, what would be the auction numbers for this quarter?
It's around 110 crores.
110 crores, yeah.
Yes. Thank you and all the best, sir.
Thank you. The next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Yeah, so thank you for giving me the opportunity. Sir, why we have not focused on stage 3 assets? It has still increased from March 3.79 to 4.26. Because if we think, if you compare the last year, still gold prices are still higher, and we can go for collection efficiency or auction and decline or arrest the increase in the asset quality. Any specific reason we are still allowing the customer to hold the asset though it is above 90 days after the 12 month also? Any specific reason?
Yeah. We have actually been quite supportive of the customers, and we have been many of our customers we have been collecting part interest from many of these customers. So some of the customers pay part interest, and those which have gone into the stage 3 category also have accounts. Many of them have accounts which have already paid interest. So most of them would have paid part interest also. So when they are paying part interest, it shows that they have not abandoned the gold. They would like to keep their gold. They need little more time. So when these customers approach our bank and request that please do not auction these gold, we tend to keep it for some more time, because that definitely endures well with our customers, and they are also quite happy. And finally, the company does not lose money here. If you look at the NPA amount of 2,878, that if you look at the tonnage of that, it is only 60%. The LTV at today's price is only 60%. So even if we add all the interest on that, even then we are still in the money. So the point is, as long as we are in the money, customer has paid part interest. He has shown his interest to his commitment to pay more, and he doesn't want to lose the gold. We don't want to auction. We can auction the gold, but then we'll be unfair to the customer who have been paid. So since we can safely carry some of this as NPA in our books, we tend to even to support the customer, so that customers don't go away. Because once you auction, the customer is definitely unhappy. And those who have paid part interest, etc., many of them, and requested for extra time, they are doing them. This has been our position, and finally, over the last decade, we have not lost any money in this through NPA. None of these NPAs result in a loan loss for us.
So out of this 2,900 crores, if you can share how much percentage of customers would have not given a single penny? Is it all the customers have paid some bit of interest?
We haven't got any such number, etc. But many of them pay money, and that is why we give them more tax. So it is the branch managers, and the data also shows that you have not lost any money.
Yes, that was great. That was very helpful, sir.
Yeah.
And sir, if you can share one data point, interest accrued, what will be there as of March 23, and similarly Q1 FY24 numbers, sir?
June it is 1,856 crores, 1,865 crores, and March it is 1,853 crores.
Okay. So thank you very much, sir.
Thank you. Before we take the next question, a reminder once again to participants that you may press star and 1 to ask questions. The next question is from the line of Rajagopal Ramanathan from Sadakush. Please go ahead.
Just two questions, sir. One is, I don't know whether you normally disclose this, but do you disclose NIMs for your vehicle financing business and your microfinance business? If not, can you indicate what they could be, or a range at least?
The vehicle finance?
Yeah.
Vehicle finance.
The Muthoot money business.
So the yield on the two-wheeler portfolio, we have roughly about 22 to 23%.
Okay.
This is on the yield side.
Okay.
The cost of borrowings.
Yeah.
Cost of borrowings would be roughly about 8.3%.
8.3. And what would it be for the Belstar book?
Yeah, the yield would be 24 to 25, and the cost would be 10%.
Cost is around 10. And could you also just sort of explain what led to a significant pickup in NPAs in the vehicle financing business, and what have you learned? And because you intend to infuse equity into this business, what is your strategy going forward? So some strategy would always help us.
Yeah, so we had seen a spike in the NPA for our vehicle finance business, because about 3 years back we were funding commercial vehicle construction equipment, both new and used. Those are product lines that we have hitherto stopped about 2 years back, and today we are focusing purely on the retail customers that are aligned with our gold loan customer base, and focusing only on two-wheelers and used cars. Our NPAs quarter on quarter for the last 3 quarters has been coming down in Muthoot Money. But I think our learning was that probably on the commercial vehicle construction equipment sort of product lines, it requires a little different sort of a skill compared to the retail franchise that Muthoot has.
Okay. So going forward, you will continue to focus on segments like two-wheeler financing, and what else, sir?
As of date, it
used
is
vehicles,
two-wheeler financing and used cars, etc.
Used cars, okay.
For the next 10 years, we'll do only that. Year and year, we will look at what is the better one, and then change and tweak according to the requirement.
Fair to think that this would at least be the strategy for the next 3 years, right?
Don't put words into our mouth. Let us do the business and the strategy, please.
Great. And what about Belstar? Now, what is the capital adequacy at Belstar?
Currently it is 20%.
20%, is it?
Yeah.
So would you need to increase capital adequacy there, or would you need to go out and raise money?
The current year growth, this thing there, it is thinking of some fundraise options we are thinking. I think concrete finalized, but fundraise options also Belstar is thinking.
Okay. The reason for asking is, are the rating agencies mandating any minimum threshold from a capital adequacy standpoint for the credit rating that you are currently at?
Now we are at 20 actually. This year's growth is well capitalized. Maybe for the next year's growth only we need to look at it. Before that, the committee has been formed to find out options possible.
Okay. Thank you very much.
Thank you. The next question is from the line of Shweta from Elara Capital. Please go ahead.
Thank you, sir, and congratulations for good set of numbers. A couple of questions from my end. So firstly, year-on-year basis, we have seen rise in bank borrowings. So is it the incremental spike in cost of funds which will come by should definitely come from yours? So what sort of repricing you're seeing on this book, and how would the mix shape up ahead? And secondly, because you clearly mentioned that, you admitted that competition sustains. And defying that, we have posted over 20% growth this particular quarter. So how sustainable is this? And since you mentioned that focused players will continue to do well, so how are we doing differently today, now that even teaser loan schemes are behind? So can you please address that? Thank you.
So I think bank borrowings have gone up. If it has gone up also, it has gone up because of AUM is also increased. There was a growth of 4,600 crores in this quarter. So it should be compensated by some sort of borrowing, and bank borrowings would have been one of that. And we also repaid some of our ECB loans. So that has brought down the other than bank borrowings. So bank borrowings are a part of our DNA, and we need to do bank borrowings, etc. Your next question was about whether the 26% or 25% is sustainable, etc. I think I answered earlier also. We have given a guidance of 10 to 15% for the year, and I'm sure we should be achieving that. We don't want to change our guidance now just based on the good performance of Q1. We'll try our best to do the best and probably do better than what we have promised. And I don't remember what was your second question. What is your second question, madam?
So the same, it was a follow-up. So you mentioned that focused players will continue to do well. So what differently you're doing now that even teaser loan schemes are behind? So to sustain this growth, defying competition.
Okay. Actually, we are not doing anything different. We are continuing to do what we are doing. It is only the new players who come and start doing different things. We continue to service our customers. We continue to do them good service. We continue with what we are doing. So some of these, that is because we said we are focused. Some of the other players come, they do something, they get some business. After some time, they lose interest, etc. Okay, only time will tell. For us, we are focused. We are continuing. We will continue on focus on gold loan, etc. And I'm sure going forward, the focus players, I repeat, will definitely be doing well going forward.
That helps, sir. Thank you and all the best.
Thank you. The next question is from the line of Pranay Khandelwal from Alpha Invesco. Please go ahead.
Hello, sir. Am I audible?
I already answered your question.
So, can you be louder?
We can't hear you.
Hello. Am I audible?
Yes, little more louder, please.
Pranay, if you're on a hands-free, request you to use the handset. It's not very clear.
Hello. Am I audible now?
Yes. Okay, we can manage. Okay, please go ahead.
Yeah. I'm sorry if I missed this information. I think I joined a little late. I just wanted to know what's your outlook on the yields going forward. Are you looking to maintain the yields, or will you be looking to increase your yields on the gold loan side?
Okay, I already said that the yield will be a function of the borrowing cost also. If our borrowing cost goes yield. The yield will be a function of the borrowing cost. If our borrowing cost is going up, our yield or the lending rate also will definitely go up. So it's not that we are going to maintain the yield, we will try to maintain the NIM and the spread.
Okay. But in the same respect, I think if banks keep on their foray into gold loans, I think wouldn't it be harder to pass on that borrowing cost, because there they'll probably look to maintain them at a lower interest, and will we be able to pass on costs easily if that happens?
I think we have crossed that bridge of almost 2 years back. So 2 years back itself, bank started this, and we have been able to maintain our business and our position and maintain at least good part of our NIM, etc. I think going forward also we'll be able to do that. It is nothing new, sir. It is last 2 years, 3 years, banks have been doing the same thing, and our strategy has been to grow, and we have been able to maintain reasonable NIM and spread.
Okay. And also, do you have any? What do you think about the impact Open will have on our business, Open Credit Enablement Network?
I didn't understand, sir. What is Open Credit Network?
The government is coming up with a new initiative, Open Credit Enablement Network, and that is supposed to unlock a lot of, that is supposed to help a lot of underbanked and unbanked areas be reachable by financial services companies. So do we have a view on that, if that will be a threat to our business?
No, in fact, we are actually embracing these things and building it into our business models for unsecured loans. So Muthoot Finance, as you know, has an unsecured salaried personal loan product as well as unsecured business loan products also. So these are new initiatives and public infrastructure that the government is building. We are also embracing that into our business models.
Okay, all right. Thank you. That's all.
Thank you. Next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, hi. Good evening, everyone. So two questions. First one for Oommen sir. Sir, I mean, at the beginning of the call itself, you guided that cost of borrowings, which are at about 8.4%, can stabilize around this 8.6, 8.65, which is where bank MCLRs are. Just wanted to understand, sir, almost all of last year, we didn't see any increase in the cost of borrowings. Now that we started seeing that increase, you think with repo rates remaining here, the cost of borrowing should peak out around that 8.6, 8.7%?
So as it stands now, it should be around 8.6, 8.65. We don't have a visibility in terms of whether there could be a rise above that.
Got it. So the second question that I had was again on the asset quality. You partly answered it, but sir, I mean, just trying to understand this NPA going up is appreciable. You are giving more time to your customers, people who request you not to auction their gold jewelry. But what is it indicative of? Why is it that, I mean, people are not paying their interest? Why is it that people are not renewing their loans? Is it indicative of some stress somewhere that people are not coming forward and paying their interest, renewing their loans? So you've seen multiple cycles, multiple gold price cycles as well, gold prices moving up and down. At this point in time where gold prices are higher, what is this indicative of? I mean, this increasing NPAs, customers not paying their interest?
First thing is to understand this is not an EMI loan. We have given it for a 12-month loan, and just to people who do not have a regular cash flow. This has been taken by somebody. Somebody has a regular cash flow, monthly expense, he would take an EMI loan or a personal loan, etc. Here, he is expecting some money from somewhere. It has not reached. And secondly, the number of loans which goes here, it is not even 2% of our portfolio. So if you have lent 100 people, only 2 to 3% of them come into this bracket. All the balance 97, 98% people have already taken it back. So it only doesn't show that there is some big stress in the market. There are some individual people who have some stress. That is why they are coming for a gold loan also, because they don't have monthly repayment capacity, monthly source. That is why they are taking a loan, paying higher interest than any other loan. That is because of the comfort they receive, because there is no EMI pressure. So this is just natural, nothing great in this. As I said, we are definitely in the money. the principal plus interest. If we auction the gold, we can definitely get it, but then people have paid some part interest. They have shown their commitment to the borrowers that he is keen to take it back. He just needs more time, and we are there to give more time. When they request for it, and they request the branches to give more time, some customers we give the time. Even if after some time they are not coming forward, we have to auction it. So just giving a helping hand or an adjustment to the customer so that we don't need to auction. It's definitely a customer-friendly measure, and that is one of the reasons why many customers choose Muthoot over many other companies. You should see that has always been said, Muthoot Finance has all the other NBFCs right around the branches, right around any branch. Any branch of Muthoot has at least 4 or 5 NBFCs being gold loan. But still, many customers come to us because of some of these things. We have been more reasonable and more accommodative of the customer, and we have never lost any money also on this account. We have only gained the customers. This is why we give little more time to these customers. Finally, we don't lose money. That's also, as an investor, you would like to know that.
Got it, sir. And so last question, just a follow-up here. Just trying to understand when you said, right, I mean, we wait for a certain time and then eventually if the customers will not come, that is where we auction the gold. And obviously I understand we don't lose money somewhere. Earlier you also said that some of these customers who are there in stage 3, the effective LTVs are around 60%. So even at the interest, we will still be in the money. But I mean, internally, what is it that you track? How many months or quarters do you wait before you eventually decide that, okay, let's auction the gold jewelry of this customer?
I think that is a function which at the field level the managers take. The managers come back and say, sir, there is no point giving him any more time, but rather we auction it off. It's a decision taken at the branch level individually.
Okay, sir. That's all from my side. Thank you and best wishes to you and your team.
Thank you. Next question is from the line of Jigar Jani from BNK Securities. Please go ahead.
Yeah, hi, sir. Thank you for taking my question. So basically, your active customer base has gone up by almost 2% in the quarter, Q1Q. Do we expect this trend to continue going ahead for the rest of the quarters? Are we confident of adding similar sort of range every quarter going ahead?
Yeah, I think we have taken quite a lot of initiatives. I think you will also see that we have put a lot of advertisements. Other than Amitabh Bachchan, we have also gotten Madhuri Dixit also as our brand ambassador. A lot of advertisements are going. That will be on the media side, and we have also started, or rather, doing more of this local road shows and initiatives. That definitely is bringing in more customers. So going forward, we should see more customers coming in. But as you also know, there's a big churn here. So customers come, customers go, 100 customers come, 80 customers take back their gold, another 110 come, next year another 100 goes away. So it's a churning, quick churn is there. Our job, our effort is to see that those who have taken a gold loan earlier either come back to us or new customers also come. So those who taken a gold and taken it back, we would expect them to come back maybe after 3 months, 6 months, 6 months. It's a treadmill like. We are on a treadmill. Yeah.
Sure. And sir, so considering you're investing in marketing, and so are we kind of confident of maintaining our earlier guidance of OPEX to average assets of 3.5%, or will we see an increase?
What is that? I didn't hear you. What is that percentage?
OPEX to assets, I think last quarter you had guided about 3.5%.
There will not very much drastic increase or decrease in the OPEX exercise. It will be almost the same lines only. Not that we are going to invest 1,000 crores on these things, but it will be reasonably good investment we make year on year.
Right. And sir, last question, can you share your AUM by ticket size, less than 50,000, 50 to 1 lakh and above 1 lakh? Gold loan AUM.
Let's see some. Just a few minutes, let us take it up. Any other questions we can take somebody else. We'll reply to this shortly. Yeah.
Sure. Thank you. Thank you so much. That's all.
Hold on. So, hold on.
Yes.
Loans above 3 lakhs is 27%. Between 1 lakh and 3 lakh is 38%. And less than 1 lakh it is 34%.
Okay, got it. Thank you so much, sir. That's all my questions. Thank you.
Thank you. The next question is from the line of Arul Selvan from Independent Advisors Private Limited. Please go ahead.
Hello, am I audible?
Yeah. Yes.
Good evening, sir. Congratulations on a great set of numbers. I had just a few questions. I was actually going through the performance of your microfinance subsidiary, and one thing that really stands out here is that over the last 2-3 years, there has been a substantial, improvement in the quality of your microfinance loans and the asset quality. I was just wondering, have there been some learnings? Have there been some changes in your strategy? Is this kind of the quality that you expect to kind of, maintain going forward?
You put a right question. Yes, we would like to maintain this as this, but then these are the lower end of the pyramid, lower end of this.
Right.
As long as there are no big hiccups coming in the market, I think we should be able to maintain it.
One differentiation is the SHG model. That is, unlike the other microfinance companies, the focus is here more on the SHG model. So that group SHG model. Normally, other microfinance companies are on the JLG. So that's one thing which is working. The stickiness as well as the repayment habits of SHG groups are better than the JLG model. So that's one reason. Of course, the other some tweakings and digital more dispersal, all those things have helped us to improve the collections also.
Okay. So could you just explain a little bit more about the difference between, I'm guessing when you say SHG, you mean self-help group versus, joint lending groups, right?
Yeah, the SHG actually is a bigger group of people, and they've been trained a little bit on how to make an earning as well as savings, etc. And they don't need the money is lent. So after 6 months paid work by hand in hand, the group only the money is lent. And the other one, there's just a borrower directly comes, borrower or a level like this. And the number of team also is lesser. Maybe JSC is having 7 members, but the SSG is having 20 members. So there is a difference. The thickness as well as the lending. First one is not a lending, it's a saving and maybe their consumption.
Something like a few months seasoning is there before the loan is due. That is the difference between SHG and SSG.
So we thickness collection, and we have another differentiator also. Unlike other microfinance companies, we have a branch model where people have to come and remit it. Most of the other microfinance companies, they don't have their collection executive just goes back to the field and collects it. So I think those two are the one differentiator with the other microfinance companies.
Okay. And any learnings in the last 2-3 years? I mean, anything differently that you've done, which could, kind of indicate that there's improvements and that will sustain this sort of levels will sustain.
Yeah. For that demonetization, etc. will come first.
Okay, I understand. So actually, that brings me on a slightly related question. I also noticed that the AUMs of your housing and your two-wheeler portfolios have shown a substantial increase. Is there any guidance that you would like to give in terms of how much of a increase that you expect for FY24 in these portfolios?
In the housing finance, I think we have given a guidance of 1,800 to 1,900 crores by the end of the year.
Okay. Microfinance and two-wheeler, sir?
Two-wheeler, I think it will be very, very modest, sir. Very modest.
Okay. And microfinance, sir?
Microfinance, I think they want to reach about 9,000 crores.
Yeah.
It's about it was 7,000 crores. We would like to reach about. I think that's something the guidance they are good. By the end of the year, 9,000 crores.
Okay. And one last question, sir. Not that I'm complaining, but any particular reason for the cash levels to have decreased to these levels?
Yeah.
I think 2-3 years back, the total amount of cash that you maintained was much higher, and now
Because everyone was complaining about excess liquidity, we also wanted to reduce. Of course, the loan growth has also started coming in. Look at last 2 quarters, we have grown almost like 9,000, 10,000 crores. So that reduced the excess liquidity.
No, I understand, but my larger question here is that are you comfortable with the liquidity levels at where they are currently, or do you plan to kind of get back to?
This is a liquidity level which is comfortable. We keep on raising funds, which should meet the growth requirement.
Okay. No, I mean, I was more wondering whether at these levels, you're able to be comfortable, because the last time I think what sir was saying was that unless you have a substantially higher amount of cash available, it gets difficult. The bargaining power is not very high with the banks. I was wondering whether if you're able to continue borrowing, from other sources at these levels. That was
it's not an issue. It's also a good level, very, very decent level. Because I don't want to name. There was some reports of some companies who are having almost similar AUMs, etc., with a very low cash in hand. So still they are much better.
Mm-hmm. Okay. That's it from my side, sir. Thank you very much, and all the best to you.
Thank you very much. A reminder to participants that you may press star and 1 to join the question queue. Ladies and gentlemen, to ask questions, you may press star and 1.
Probably all the questions might have been answered by now.
Right. Actually, that was the last question in queue. There are no further questions. I'd like to hand the conference back to the management team for any closing comments.
So, from the management side, thank you. And probably we will continue. We'll put in our best efforts to do better and better quarter on quarter. We value your suggestions. We value your comments. Please keep us well informed of such things, and we will, from our side, see that we do the best for the company and best for your new investors also, as for all your stakeholders. So we'll be doing our best going forward. Thank you for the support, and thank you for a patient listening.
Thank you, Sankesh, for organizing the call. DAM Capital.
Thank you very much.
Thank you. Shall we switch off?
Yes, sir. On behalf of DAM Capital, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.